conversation this last week with a past client of mine who we had helped buy a home several years ago now. And with the drop in interest rates that's happened recently, his question was, should I consider refinancing? Is now a good time for me to refinance? And after going through all of the options for him and looking at the savings that it was going to be, coupled with his plans for the next few years, yes, it was a good time for him to refinance. So with that in mind, I thought you might have that same question or know somebody that has that same question. So I figured I'd run through some of those options and give you some pointers what to look for if you are considering a refinance. My name is Andrew with the Andrew Smith team at eXp Realty, and we've been helping buyers and sellers for 17 years now, both in California and Texas, and I just wanted to share some of this information with you here today. So refinancing. Interest rates have come down and they're now running, depending on which bank and which report you see, somewhere just over 3.5 to 3.75%. They're actually the lowest they've been in 3 to almost 4 years now. But does that mean you should refinance? Well, when you look at it, historically, the rule of thumb has been it's not necessarily a good idea to refinance unless you can drop your interest rate 2 full points. So you would need to have an interest rate right now, 5.5 to 6%. That's changed somewhat over the years, and many of the lending partners that we work with have started to recommend that you should be looking for a reduction closer to 1%. Right around 1%, it could be worthwhile. But everyone's situation is different, so we're going to run through that. Now, first and foremost, why do you want to refinance? And obviously to save money, but that's not the only reason. There's 3 main reasons why people usually choose to refinance their home. First, as we just touched on, is to save money. So it's going to be to lower their interest rate and their payment, put more money in their pocket every single month. And obviously that is a great reason. Number 2 could be to shorten the term of your loan. You may have been in your house 5, 6, 7 years now. Your income could have gone up, and it now may be a great time for you to refinance from a 30-year mortgage into a 15-year mortgage. So you're going to be paying off that principal balance even quicker. And the third most common reason people refinance is to take cash out, maybe for home improvements, a project, it could be for college, any reason, consolidate debt, anything along those lines. And there could also be a reason for that. But if you find yourself in one of those positions where you're considering the refinance, it's important to keep in mind how much is that refinance going to cost you, because there are going to be fees involved. Typically, those fees can run 2 to 3% of the loan balance. So if you're refinancing $300,000, for instance, then fees associated with that refinance could be anywhere from $6,000 to $9,000. So that's obviously a big chunk of money that it's going to cost you to actually do the refi. So the other option is that lenders will often do a no-cost refi, but you've really got to look at that carefully, because in order for them to do a no-cost refi, it doesn't mean it's at no cost. There's absolutely cost involved. It's just you're not paying them up front. You're either going to pay them by them including those costs in the new loan amount, number 1, or they're going to have a slightly higher interest rate in order for those fees to be recovered. So how do you know if you should refinance or not? Well, a lot of that comes down to what your longer term plans are, your objectives, and what your break-even point is. And here's what I mean by the break-even point. Say you're at a rate now, and if you refinance, you're going to save yourself $250 a month in your mortgage payment. That's great, $250. But let's say it's going to cost you $10,000 to complete that refinance. What you would then want to do is take $10,000 and divide it by 250. Okay, and it's whatever the cost and or savings is going to be in your situation. So you take the cost and you divide it by the monthly savings. That number is going to give you the number of months it is going to take for you to break even on that refinance. So if that number comes out to 60, 5 years. So it's going to take you 5 years before you actually start saving money. If hopefully that makes sense to you, because that's the time that the costs will have been paid for by the savings. So then you have to look at, what are your objectives? Do you think you're going to be in your home for another 5 years? If right now maybe you have a young family and it's growing and you might be needing more space in the next 2 or 3 years, then no, it's probably not a good idea for you to refinance. It's going to cost you and you're not going to recover all of those benefits. But if you're in your home and there's no reason for you to go anywhere and you don't foresee any changes for the next 5, 6, 7 years, whatever that time frame might be, then yes, it could be a good time for you to refinance, but only you are going to know that. So again, do that calculation, total cost of the refi divided by the monthly savings is going to give you the number of months to break even. Now, I know that can get a little bit confusing. If you have any questions about that yourself or want to run some numbers or run through a scenario, we're happy to do that with you to kind of give you some ideas and maybe even refer you to a lender that can provide you, an exact cost estimate and savings opportunity for your specific situation. If that would be of interest, shoot me an email, andrew@theandrewsmithteam.com, or give me a call, 888-447-9650, and I would be happy to run through those scenarios with you and hopefully provide you with the information you need to know if it's something that you should be looking at right now.